Good day to one and all. This is Dr.Sivaraman of IKnowIndices.com. I'll be presenting the Asian Session Live Market Analysis webinar. So I will share my PowerPoint presentation. Okay. I'll be giving the live market analysis and the forecast webinar, explaining the forecast for the week 12th to 16th of October. And today we are on 12th of October. So we will try to review what has happened in the market last week. On Friday, 9th of October, I gave the forecast and also some trade calls. So those of you who attended the webinar and also those who have just listened to that of the recorded webinar might have seen that those calls have really made nice profit. Basically, the forecast on Friday was telling that there will be a dip during that of the European session and then a rise during that of the US session. And also during that of the Japanese session, I was expecting that from 5 GMT, the time I started the webinar, up to that of 7 GMT, the end of Japanese session, and also the early part of the European session, the market is going to be upward. So that is why I given the buy and sell call in the case of Euro, GBP, Australian dollar, and all of them made the profit. So again, I will give the derived forecast for this week. Today being Monday, I will give it for the entire week and which is derived using my statistical algorithm. Then besides, I'll be doing the market reading and also live market analysis, that is trying to find out what is happening in the market, whether they are making the USD weakening or the USD gaining or a mixed move or a contrarian move. That we will try to analyze. Then finally, I will explain the trading strategy briefly, how exactly we can take the positions. I will give the live calls and you can follow it in a demo trading platform. So this is the forecast sheet for this particular week, 12th to 16th of October. And today, this week is the second week of October. The market is expected to show the trending move on the upside. So swing and rise moves may be seen in this week. As usual, you will come across the week beginning false move slide during that of the European session, and that will be a great buy opportunity. And later on, they are expected to make the firm up. And tomorrow, they will try to do the either way stop ends, 13th of October. They will try to make a slide to start with on the firm up and then slide, giving the confusion to that of the traders whether Euro and GBP will go up or come down. Then they will just hold on 14th of October midweek and pretend as if they are going to drop, but they are going to rise from that of the US session. And then slowly on Thursday, they will firm up further. And Friday also, they will firm up the market. So if you watch carefully, you will come across most of the European session. The market will be showing a swing and slide move. So you can wait for the late European session and take the buy position. And then when they rise, you can book profit. Otherwise, you can do the sell around the late Japanese session and then close it during that of the late European session as another alternative, and then turn long in the case of Euro and GBP and book profit during that of the firming up move. That way, two trades you will be able to select. And also, if you want a small profit trade, then during that of the Japanese session, during the session start time, you can take a buy and book profit during that of the firming up move. So then it becomes the session-wise trade for you, 3 trades in a given day. Then next week is going to be the 3rd week of October. It is a trending time again on the upside. 19th to 23rd of October, swing and rise moves are expected to happen. So you'll come across more and more gaining moves in the case of Euro and GBP. Along with that, USDN and USD are also expected to gain the levels. Now, if you analyze carefully the current market levels, that Euro is showing about 13 pips positive net change. GBP is showing about 3 pips positive net change. But Australian dollar is showing negative net change of 15 pips. It's a contrarian move because the numerator, Euro, GBP and Australian dollar, when all show positive net change, it is USD weakening move. But whereas Euro and GBP are showing USD weakening move, Australian dollar is showing USD gaining move. Similarly, in the case of the denominator currencies like USD yen, wherein the currency is in the denominator of a ratio. That is why denominator currencies USD yen, USD CHF, and USD CAD. So USD yen, USD CHF, and USD CAD, they are all showing negative net change. When they show negative net change, that means they are making the USD weakening move. So, excepting Australian dollar, all other currencies are showing the USD weakening move. So, this is how you have to compare the currencies in a given time and try to find out how exactly the players are expected to push the market, either on the upside or on the downside. The forecast says today the swing and firm up move during the Japanese session. The Japanese session will get over by 7 GMT. Then 7:30 GMT will be the European session up to 13 GMT. And then 13:30 to 20:30 will be the US session. So you can try to do the trade within the session. Try to buy and sell, book profit, then sell and book profit on the downside by 12:30 to 13 GMT. Then again 13 to 14 GMT, 13:30 14 GMT, you can take a buy and then book profit during the rise. Up to by 20:30 GMT, you can book profit. So these are all the trading potencies. Now coming to the expected levels in which the currencies are expected to move in this particular week, 12th to 16th of October. Now, if you compare it with that of the live market code page, you find, okay, I'll just go to the okay. Now, Euro could come down to 1.1250 and it has got a potency to go up to that of 1.1550. So be careful, don't be in a hurry to short Euro, and they could certainly gain the levels as it is the trending time on the upside. So if you are a smart trader, you can do sell and buy trade. Otherwise, wait for the drop and then take the buy position so that easily you will be able to book profit. But if you short sell, you have to close it carefully within the session. If you don't follow the time and if you don't keep stop at entry in that of the sell position, as soon as the position makes profit, you might come across difficulties. So be careful with regard to sell and buy trade during this particular week. And when they are making a quick upward move and stop cutting the new high for more than 30 minutes, then you can take a sell. That means after the quick upward move, they are going to slowly make the slide and they hit all the stops on the upside. Then they start making the slide, inducing the traders to take long and come down. So that way they lighten their positions before rising it further upward. So this is part of the game. They cannot continuously rise, and to rise they have to accumulate positions. If they accumulate position, they have to pay margin for that. They are also traders. The players are also traders. So they have to pay the margin for it. So it will be billions of dollars as margin. They will not take the risk that way. So what they do is they just quickly gain the level, and that is why you come across the quick moves and then book profit in those buy positions and allow the market to drop. The traders who are taking the long will liquidate at the lower level, and then they will buy back again and then quickly gain the level to the next level. So that way, in a cyclical fashion, they will try to gain the levels in the market. So they are expected to make an extended downward stop into 1.1250 area in the case of euro, and then gain the level. In the case of GBP, as you know, that it is the most vulnerable currency in order, and also it can easily change the market sentiment. They could come down to 1.5225 area and then quickly gain the level to 1.56. So current highs and the lows, I have mentioned it. The expected ranges are given. Estimated range, mathematically estimated ranges are given on the top. Then USD it could come down to 119.50 area and then start gaining it when euro and GBP are gaining the levels. And it's similarly in the case of CHF, it could go below that of 96 briefly and then start gaining the level when euro and GBP are gaining as a contrarian move. USD CHF is also expected to gain. Similarly, USD CAD is also expected to gain the level when they are gaining the levels in the case of euro and GBP. We will come across USD CAD is also expected to gain. That way, the players will gain the levels in the case of euro CAD and GBP CAD, etc. And Australian dollar is also expected to gain the level. Now, if you see the net change, you find both Australian dollar as well as USD CAD are showing negative net change, which is a contrarian move. Similarly, they will show on certain other time that both in positive net change. So by that, they will gain the levels in the case of the commodity crosses. Then Hasan has got a question. Can we take long position in euro to hold for a long term? If the euro is gaining levels, yes, when they make an extended downward stop and you come across around that of the recommended buy level, you can try to take the buy for a long-term position trade during the trading time. But still, my humble suggestion will be use the hedge order to limit the risk, because ultimately the traders need to be addressing the problem of risk. And if you don't envisage the risk, then suddenly when the risk appears, you become stunned. You are not in a position to handle it properly. So be careful while taking the buy position or the sell positions. Try to keep always the hedge order, the hedging facilities available in our trading platform. In the event if it is not available, don't hesitate keeping the stop, because once you are stopped out, you can again re-enter into the market as a buy position. There is no need to do a contra trade. You can reinstate the buy position. That will earn the profit for you and you will be able to book it. And once you are hedged or once you are stopped out, see whether the market is going below that of the stopped out level for 30 minutes. In the event if it is not going below, that means it was filled during the stop, and then re-enter buy at that time and then keep the stop again. Once the position makes profit, keep stop at entry. Then your risk is eliminated. Then subsequently you find that you are in a position to earn money from that of the trade. So always keep in mind, the trade can work when it is in plus, in the money, but it should not work when it is not in the money. And that way, if you allow it to be there without the hedge order, it can erode your usable margin. Then it can trigger your fear. And Sharon has got a question. Do the daily limitations in pips net change still be the same? Yes, they are same. Nowadays, like what you have mentioned in your 10-part trading system in 2010, yes, absolutely no change. The daily limitations of 150 pips in the case of euro, those remain same. Now, so in the case of Australian dollar, the downside might be limited, and then subsequently they are expected to gain the levels. So try to watch and carefully take positions in those currencies. And now we will come to the market reading. As far as market reading is concerned, we have to note down the initial lows and the highs around 3:30 GMT, and then try to find out whether the market is deviating from those highs and the lows. And in the live market code page here, you find that besides the GMT time, instead they are giving the Eastern time. That is why I kept a window from FX Trade showing the GMT time frame. Currently it is 5:19 GMT. And with regard to the initial lows and the highs, they are still showing the same Friday lows and the highs. But actually today's lows and the highs are 1.1355 in the case of Euro and 1.5377. So they are not breached the low or the high. In the case of GBP, 1.5312 is the low, 1.5334 is the high. They just breached the high and went up to 1.5337 and come down. There is a brief upward move and then come down, but they are expected to hold, probably may make a brief downward stop and for about a few pips or 4 or 5 pips, and then start gaining the levels in the case of GBP to start with. Thereby, they will be able to give the market sentiment, a bullish market sentiment, when the traders buy after that of the rise. During that of the European session, they are expected to make the slide and induce those who are entered long at a later stage after the rise to liquidate the long position. Then later on, during the US session, they will make the rise. So always follow the market timings. Then you will be able to make out why the market is suddenly becoming active, why the market is subdued, and things like that. Because earlier in the late sessions, they handle the majors, mid sessions, they handle the crosses. So suddenly when the market momentum comes down, you should not feel that there is no volume in the market. It's not like that. They handle the crosses at that time by making contrarian moves in the case of the majors. Now coming to that of the yen, 120.09 is the low, which is not breached. 120.27 is the high, which is also not breached. So you find here, in all the three cases, the spread between the high and the low is less than 40 pips. So when the spread between the high and the low is less than 40 pips, it is not advisable to take the positions. If we take the positions, we have to hold the position for a long time. So once they make the spread between the high and the low for more than 30 pips by breaching the initial low or breaching the initial high, then when they breach the initial low and go below, stop cutting the new low for 30 minutes, then take a buy. Similarly, when they go above that of the initial high and stop cutting that of the new high for 30 minutes, then you try to take a sell. Then you will be able to, you can keep the hedge order to limit the risk. And once they move the market in your favor, you can keep stop at entry and then subsequently use the trailing stop to book profit in the trade. Now, coming to that of CHF, again similar problem, that 0.9604 is the low and 0.9617 is the high. They are not breached the low or the high. Then Canadian dollar, 1.2914 is the low, 1.2960 is the high. They are not breached the low or the high. Then in the case of Australian dollar, 73.06 is the low, 73.47 is the high. They just breached it by 1 pip and come down. So this is what you come across in the market. So what sort of trade you can do it? Now trying for that of the trade. Okay. Because I have to come to that of the writing mode, only then I will be able to enter. Otherwise I can show it as a slideshow. Now, with regard to the trades, the spread between the high and the low here is very narrow. Euro, which is not the one I showed you, and GBP, everywhere the spread is very narrow. And then the expectation as far as the forecast is concerned, whenever the spread becomes the high and the low is not more than 40 pips, you can better avoid entering into the market. But if you want to follow the forecast and take positions, what you can do is you can take the buy positions 10 pips below that of the market. So in the case of euro, buy limit 1.1363 with the exit of the psychological level 1.14. So they will try to breach the psychological level before coming down, because they will hit the stops on the higher side and then come down. So it could go up to the 1.14. From that of the high, about 23 pips, 1.1387. 77 is the high, so they can go up to 1.1399. So we can keep it as 1.1397 as the exit. Because see, I'm giving the exit which could get a definite fill. Otherwise, you can use the stop at entry and trail the stop and maximize the profit when they are continuously rising the level. On Friday also, when they continue to rise the level, you are permitted to, or you can definitely do a shifting of the limit order to the higher levels, move it to the higher levels, and use the trailing stop in the position so that you will be able to maximize the profit. I'm giving it as a swing trade, exit or take profit level, and you can always move it away from that other market to maximize it, provided you have a trailing stop in a profit making position, or at least stop at entry. Then we will keep the hedge order or the stop 30 pips below 1.1333. Then in the case of GBP, they already indicated that they wanted to gain the level, and they are not breached the low, but they breached the high and come down and holding it. So we will try to take a buy position in the case of GBP. $1.5333 with the level to exit. It is 1.5337 is the high, and they are likely to make a jump of at least 45 pips. So we'll try to keep 1.5380 and a hedge order or a stop 1.5303. Now at this moment I will not recommend Euro Yen, because they are doing straight move. When Euro and GBP are gaining, USD Yen is making us dip. So if you take position in Yen crosses, it may not yield good profit. Now CHF, they are making a contrarian move. So in the case of USD CHF, you find positive net change of 2 pips when Euro is making positive net change. So they are likely to gain the level in the case of USD CHF when Euro is gaining the level. So we will try to take USD CHF buy position. So buy position, we can take it at the current market level, 0.9615. a buy position, and we'll try to keep the exit level 0.9645, just 30 pips above, and we will keep the H order 0.9585. Then Australian dollar is likely to come down to the low, and then it may hold in order to handle the commodity crosses. And also in the case of Canadian dollar, they are showing negative net change. They are going to handle the commodity crosses. So those who are interested in commodity crosses like Euro CAD or Euro Australian dollar, etc., you can watch and take the positions accordingly. As I explained many times, that how exactly they make the contrarian move. And just now in the case of Euro, for example, they are showing positive net change. Australian dollar is showing negative net change. So when Euro is showing positive net change and Australian dollar is showing negative net change, Euro Aussie will be in positive net change because Australian dollar is relatively weaker when compared to Euro. Then it shows the positive net change. So it is likely to go up further. So already they made the higher spread, and they are likely to go up in the case of Australian dollar. Now, so these are all the three trades I just given it. Canadian dollar, they are likely to breach the low and come down afterwards. You can take the buy, but sell and buy is not recommended. So these are all the three trades I just thought I can give it. Okay. So these are all the three trades I just recommended. You can find out. And now I'll try to answer the questions which are asked here. Yes. Now, sir, building on Sharon's question, what do you need to watch out for when we trade crosses currencies? Example, GBP, AUD. That's what I explained. So if you want to trade GBP, AUD, now GBP is showing positive net change, and Australian dollar is showing negative net change. Then automatically you find that both are numerator currencies. GBP comes on the numerator of GBP CAD. Sorry, you asked about GBP CAD. Okay. GBP is showing positive net change, and USD CAD is showing negative net change. So when USD CAD is showing negative net change, which is showing that USD weakening move, GBP also making USD weakening move. So if they are making both USD weakening move, you will come across only with regard to the pip variation, about 20-22 pips in the case of GBP CAD. See, the net change, you come across 28 pips negative net change because both are showing USD weakening move. Whereas if you take position in GBP Australian dollar, you find it is making about 32 pips positive net change. So more the spread, you come across more chances of earning nice money. And also whenever they make contrarian move, only then big moves will happen in those respective crosses. Then how about the crosses? Are there pips net change limitation per day also. Now, as far as the crosses are concerned, no limitations, and the limitation is enforced with regard to that of the majors and the commodity pairs. So when they make the contrarian move, say for example, euro is dropping about 150 pips and USDN is dropping about 250 pips, you can see the drop in the case of euro yen about 350 to 400 pips. Beyond that, they will not be able to do anything. That is how they bring in the cumulative effect. Yeah. Let me answer the other questions. This video is not coming. Okay. See, slowly they are making a dip in the case of euro and GBP, and during the start of the late session they will make such dips. We can take a buy. So I think we should get the fill. Otherwise, you can modify and buy it around 1.1365 or so. Then, can we take a position on the crosses during early and the late sessions, or if we contrarian move? Once you come across the contrarian move, you can take during that of the mid-Japanese session and close during that of the mid-European session or the US session, because mid-sessions they handle the crosses. Then, dear professor, when will be the session time change? Once the daylight saving system becomes switched off in Europe and US by end of October, last week of October and first week of November, we will come across the changes. And at the time, I will intimate the changes with regard to the sessions. Please explain the technical trade. Okay, technical trade is the one wherein if they breach the high and stay above the high for more than 30 minutes, then they are likely to straight away go up. On Friday, I explained with regard to Australian dollar technical trade, which breached the initial high and they started going above that. And so I asked you to buy above that of the initial high and book profit during further rise. That is technical trade. Similarly, sell below that of the initial low when they are dropped, and when they hold below that of the initial low for more than 30 minutes, then they are likely to come down. At that time, you can take a sell below the initial low and book profit during further drop. That is technical trade. Then Alex, good morning. Regarding to what you said about book profit on the new high causing the market to fall in case of long positions. Yes, when they make a quick upward stop it, you try to take profit. Then what do you think causing the profit booking to an actual trend reversal? Is it the importance of the price levels? Okay, as far as the trend reversals are concerned, you are getting confused. No, as far as trend reversals are concerned, they do the weekly and the monthly trend reversals during the first week and the last week of the months. At that time, the market will be making very volatile move. Quickly, they will make a rise, hit all the stops and start making the drop as a trend reversal. But during the trending time, that is second, third week, they will make the slow gain. So more gain, less drop. More gain, less drop. That sort of moves will happen in the market. So less drop, you can take a buy. More gains, you can book profit. That way you can continue to do the trade. They will not retrace it as a trend reversal. Intraday trend reversal you will come across during that of the trending time. Like as I explained that during the Japanese session, they are expected to gain the levels And afterwards, during the European session, they are expected to make the slide as an intraday trend reversal. That will be very nominal for about 40-50 pips, maximum 75 pips. Afterwards, they will just reverse the market. Hope you are able to understand the difference. May you please comment on New Zealand dollar. Okay, as far as New Zealand dollar is concerned, okay. Now you find that it is showing a nominal positive net change. When when Australian dollar is showing negative net change, New Zealand dollar is showing positive net change. And normally what they do is they handle the Aussie New Zealand dollar cross in a big way. Also, New Zealand dollar volume is relatively less. So they make whipsaw moves very often. Either way happens in the case of New Zealand dollar. So when it is subdued holding, don't take any position. When they quickly gain the level, understand they will gain the level for 2 days. Third day you take the sell, you will be able to book profit. Similarly, when they start dropping it, 2 days they will continue to drop, and then third day they will reverse. Understand the behavior of the currency. That is why I don't touch upon New Zealand dollar, because it does not behave similar to that of the other 4 majors and 2 commodity pairs, because they are locally operated. Now Hazen, euro now 1.1371, so it's market execution. No, euro, I kept the buy at 1.1363, so still it is not filled. It's a limit order. Then G1. Do you have studied the price movement at around the London fix and price levels? Do you have any comment about London fix? See, in the market, you come across various such terminologies are used. That is the COT data, etc. So they try to distract the traders, those who think that market is being manipulated, because you find that the price is not moving in tandem with that of your expectations. When, say, non-farm payroll is negative, you expect euro and GBP to go up, whereas euro and GBP drop. Then immediately you think that market is manipulated. To convince such people, they simply use such terms like London fix, etc. And every occasion you come across, market is fixing the price. Okay, it is not only during that of the London time. So they try to use it because this normally they are supposed to do it in order to fix the LIBOR rate, etc. But don't worry about all those things. You always keep in mind that the players are well informed about the open positions of the traders. As a result, they continue to manipulate the market in order to trap the traders. So when they are quickly rising the market, understand the traders are predominantly short. They are expecting the traders to do the short covering for the weekend. After the weekend, when the traders have completed the short covering, there is no point in rising the market. That is why week beginning, they always make a drop. And before making further rise, in case if the traders are not buying, then they drop for one more day, and then the traders start selling. Then they start gaining the levels. So it is ultimately create the market sentiment and act against it of the traders from time to time. Nothing to do with it of the economic fundamentals, etc. Because the fundamental changes does not oscillate every second. The European economic condition does not oscillate every 5 minutes, 10 minutes. Can it? Can it oscillate like that? Or US economy can oscillate like that? And what's the justification when the European economy is not doing well? Okay, Euro and GBP are dropping, fine. When US economy is not doing well, Euro and GBP are rising. What happened to that of the European and US UK economy at that time? People don't talk about it. They talk about US economy. So that is how the analysts are being tuned in order to talk and add emotions to that of the traders. So what happens when the traders are curiously looking at the market, the analysts use all sorts of emotions and expressions and try to become emotional. And later on you find which has really become detrimental to your trades. Then, sir, how do you actually know when the trend has actually changed? For an example, buy to sell when it is still moving sideways. Length of time. Yes, it is purely based on, not 4 hours, sir, purely based on session timings. So the session early and the late sessions, they handle the majors. I explained it. Early and the late session, the first 1.5 hours, the last 1.5 hours, they handle the majors. I'll show you the slide. Yes, this is the slide showing the 3 part of each of the session. The early and the late session, they handle the majors, and the mid sessions, they handle the crosses. So if we take a position before 1 GMT, we should exit before 7 GMT. This is the slide. Okay, so this is the older time. The other timing is showing. Oh, okay. So this is the current timing. So you have to close it by 7 GMT, not looking to that of 1 hour chart or 4 hour chart, which it does not give you the session timings. And if you don't follow session timings, you will not be able to understand the gap time move, early session move, late session moves. Then immediately you think the market is volatile. Market is volatile. Every time when you think the market is volatile, let the volatility come down. Then later on I'll take the position. It is something like trying to take a bath in a sea wherein you expect the waves to come down, then go to bathing. Is it possible? Then how do you know the trend has changed from that of the buy and sell? Okay, this is what, as far as the intraday is concerned, we have to follow the session times. And as far as the week is concerned, we have to find out what days they are going to rise and what days they are going to drop. And that can be seen only when you look into the forecast. So you can, with the help of whatever the explanation I given, you can do the intraday trades. But if you want to do the position trade, you need the forecast. So the forecast will say where exactly you can book profit. But a rough estimate could be you can enter long during the first week of the month and you can hold it till end of that month and book profit as a monthly trend reversal trade. Could you comment on GBP New Zealand dollar as a potential turnaround point to the upside? Okay, GBP New Zealand dollar, as I told you, GBP is a numerator currency. New Zealand dollar is also a numerator currency, which is in positive net change. GBP is in positive net change. At the moment, you will come across both are showing only sideways move. So when Euro and New Zealand, GBP and New Zealand dollars are moving in tandem, you will come across very less action in the case of GBP New Zealand dollar. When they are making contrary move like Euro gaining, GBP gaining and Australian dollar dropping, then you will come across some action in the case of those crosses. Then what if they breach the initial high on Euro and GBP and hold above the initial high up to 8 GMT today? Can we take the technical trade and set aside the swing slide forecast during the European session? If they hold above the initial high for more than 30 minutes during the session start time, then you can do the technical trade. and definitely they will make a rise. We can invalidate the forecast. But if they just come down below that of the initial high in less than 30 minutes by 8:10 GMT, then you can do only a sell and buy trade. So once you find that positions are in profit, try to keep stop at entry. And Paul, can you explain the Frankfurt 2040 strategy, please? I'm not very familiar with that, sir. I'm sorry about it. Then apostolics Greece, when moving sideways, I wait for the false breakup. Yes, it is better to wait for the false quick moves or the false move. Then Sharon, what if they breach the initial high or euro and holding above here? That's what you asked. Still, euro is not triggered. So if that is the situation, because from 5:30 GMT up to 7 GMT is the late session. So they came down, but they did not fill it. So we'll try to modify to that of 70. So that becomes a position. So we have already a buy position in euro, buy position in GBP, and buy position in USD CHF. So you can just find out what happened to those trades. Then we'll take it from there. Now this week, normally I will be giving in the coming months that a webinar every week, Mondays and Fridays. No, and I will do certain alterations depending upon my work commitments, etc. And this time Friday, I'll be out of station, so I'll be trying to review the forecast on Thursday itself. Hope Adinda, you will also be in a position to help me out on Thursday to present the webinar. Then very soon, we are working on it. I will try to give the quick updates, trades for 15 minutes of the webinar, a brief outlook about the market and also possible trade. That possible trade will be an opportunity trade. If they are making a false move, I'll give that call so that you can take position on the drop a buy or a rise a sell, and then quickly book about 30-40 pips or something higher. So that way you will be able to do quick profit booking trades, and those things will be displayed 1 hour before the commencement of the webinar. So I request you to frequently check the home page of FX Trade for such updates. Then you will be benefited out of that. So I take this opportunity to thank FX Trade for the facilities provided to present the webinar, and I'll come back on Thursday and give the review of the webinar, what I have given it today. Wish you all happy trading. See you on Thursday.